In my remarks, I will discuss the international and domestic economic outlook, within which I will discuss the economic impact of the summer's bushfires and provide a preliminary assessment of the impact of the emergence of COVID-19 coronavirus, an event that is continuing to unfold. I will also update the Committee on Treasury's thinking on fiscal policy and macroeconomic policy more broadly in the face of these circumstances. At the time of the 2019-20 MYEFO, our assessment was that global economic growth had weakened in 2019, with the weakness widespread, including among our major trading partners in Asia. We considered that this weakness was close to bottoming out and there would be a gradual pickup in global growth in late 2019 and into 2020. This was consistent with the IMF's update in January, forecasting global growth to lift in 2020 and 21. The IMF forecasts were for global growth to rise from 2.9% in 2019 to 3.3% in 2020 and 3.4% in 2021. Activity was expected to be supported by accommodative monetary policy settings, fiscal policy in some jurisdictions, an improvement in global manufacturing, signs of bottoming out in the electronics and auto cycle, and expectations for some form of a trade deal between the US and China. As it transpired, there was a Phase 1 trade deal struck between those two countries in early 2020. The UK election and subsequent ratification of the withdrawal agreement also settled some of the uncertainties around Brexit. At the start of the year, we began seeing some signs of an improvement in global economic conditions. World merchandise trade volumes increased 0.5% through the year to December 2019. Labour markets also remained robust, with unemployment rates near record lows in the US, the euro area and Japan. However, the emergence of COVID-19 in late December, early January, has significantly negatively impacted the near-term outlook for China, and in the past couple of weeks concerns have broadened to other nations as this virus has spread. I will address the potential economic impact of COVID-19 shortly. Turning to the domestic outlook, at MYEFO, a number of the factors affecting domestic growth in 2019, such as falling housing prices, low housing turnover and the drought, were expected to wane. Further, towards the end of 2019, there were encouraging signs emerging for the domestic economy. GDP growth was stronger in 2019 than in the second half of 2018, while the labour market continued to outperform expectations, with employment growth remaining around 2% and the participation rate reaching record highs. The drought continues to persist. While the recent rainfall is welcome, current advice is that it may be insufficient to break the drought in some areas. Farm GDP detracted 0.2 percentage points from real GDP growth in 2018-19, and at MYEFO it was forecast to detract a further 0.1 percentage points from growth in 2019-20. Turning to yesterday's release of the December quarter 2019 national accounts, the data confirm that the Australian economy improved in 2019 relative to the weak second half of 2018. In the December quarter, real GDP grew by 0.5% to be 2.2% higher through the year. Calendar year growth in 2019 was 1.8%, above the OECD average and higher than every G7 nation except the United States. This is a solid result given the headwinds from the weaker global economy in 2019, as well as the ongoing drought. However, two key events have arisen since MYEFO that materially affect our assessment of the economy: this summer's bushfires and the emergence of COVID-19. The recent devastating bushfires are having significant negative environmental, social and economic impacts. The environmental and social impacts are not easily quantified but are substantial. With around 12.7 million hectares of land burnt and an estimated billion wildlife killed, many of which were already threatened species, vulnerable ecosystems have been badly affected. The Department of Agriculture, Water and Environment has identified 113 species that are in need of urgent management. Dr. Sally Box, the Threatened Species Commissioner, has noted that some species are under long-run threat as a result of the fires. The social impacts of the fires are also profound. Reconstruction and recovery efforts will help, but it will not reverse them entirely. Evidence from past episodes suggests bushfires can lead to long-lasting physical and mental health effects and destroy cultural heritage. Research by the University of Melbourne after the Black Saturday fires found that mental health problems continued 3 to 4 years after the fires. This emphasises the importance of the mental health policy responses that have been announced by the government. This research also found that community involvement improved mental health outcomes, highlighting the need to rebuild social infrastructure during recovery efforts, not just physical infrastructure. The bushfires have also had a negative economic impact. Our current expectation is that the bushfires will detract around 0.2 percentage points from GDP growth across the December 2019 and March 2020 quarters. Most of this impact will fall in the March quarter before reconstruction and recovery activity picks up and other spending supports growth from the June quarter onwards. This past bushfire season has reminded people of the increased probability of these events in the face of climate change. The CSIRO predicts climate change will make bushfires more likely as fire weather patterns worsen as a result of an increase in weather patterns with hot and dry winds and fuel becoming drier. Treasury continues to work with its portfolio agencies and other departments to understand the impacts of climate change and their implications for the economy. The other major event to occur since MYEFO is the outbreak of COVID-19. As of yesterday, globally there had been approximately 91,868 confirmed cases and 3,131 deaths. The majority of these cases had been in China, but given the interconnected nature of our world and the transmissibility of the virus, COVID-19 is spreading across the globe, with 77 countries having now reported cases. In Australia, there have been 41 confirmed cases of the virus, of which 21 have recovered and returned home. This data was as of yesterday. This data is regularly updated by the Department of Health. The global economic impacts of COVID-19 are continuing to emerge, but there is little doubt that they are serious. To date, the economic impacts are being most profoundly felt in China, but they are now spreading across the globe. In China, activity in the services sector, particularly transport, real estate and hotel and catering, has plummeted. Many manufacturing plants have temporarily ceased or reduced operations. China's official PMI fell by 14.3 points in February and is now in contractionary territory at 35.7 points. This is the largest contraction in the history of the index. The impact on China will be large. With the OECD in its interim economic outlook released earlier this week, suggesting growth will be around 0.8 percentage points slower this year at 4.9%. This is down from a forecast of 5.7% in November. Given the high degree of uncertainty surrounding the economic impacts of COVID-19, Treasury is assessing the situation on an ongoing basis. Global equity markets have fallen sharply during the past couple of weeks and remain volatile. Importantly, despite the volatility in markets, there are no indications of systematic stress or financial market malfunctioning at this time. The scale of the economic impact on Australia and the world will depend on a number of factors: the extent to which the virus spreads, how quickly it spreads, disruption to ports and seaborne freight, and should the COVID-19 become more prevalent in Australia, the direct impact it has on domestic economic activity. We've undertaken a preliminary assessment of what the impact of COVID-19 might be in the March quarter, and at this stage we expect the virus to detract at least 0.5 percentage point from growth in the March quarter 2020. This preliminary estimate takes into account the direct impacts on tourism, international education exports and some exchange rate effects. It does not include supply chain disruptions or other broader impacts. Beyond this preliminary estimate for the March quarter, it is too early to tell, given the uncertainties, what the full impact of the COVID-19 coronavirus will be on the Australian economy. Treasury continues to review the COVID-19 economic impacts on an ongoing basis, including by consulting widely across government, state treasuries, financial institutions and with business.